really very different sessions within a session. And I think that we have to start thinking about the day in almost a different day part. There were 3 days yesterday. There was the big up, and then there was the big decline, and then there was the big advance. But the advance didn't get us back. And I think we're looking at days incorrectly. I think given the speed of things, particularly the ETFs, we're looking at a day and saying, okay, it was a good day. No, there were 3 sessions, and 1 out of 3 was good. The last one being bad because it gave people hope. And I keep coming in and saying, we need one session. We need the session where it's down big and we wash it out. We just get this crescendo of selling. And that has not happened. So, I mean, you can be in a situation like yesterday where you'll be looking at Amazon and you'll say, okay, down 60, and down 80, down 100, and down 110. You'll never say, I got to buy. Just say, well, down 120. And then you hear people come on air and they say, well, listen, not only is FANG dead, but it's poison, it's toxic. You know, people are using Amazon to buy while they're on trashing Amazon. They're Googling things and they're saying, well, this Google's finished. Well, wait a second, you just Googled. What'd you do, Google finished?
Amazon's lost $250 billion in market cap in a space of weeks.
How many countries is that? How many countries did it lose?
It's a lot, and a lot of it, I think, came from the coffers of potentially hedge funds. You know, yesterday, guys, to this point you're making, Jim, according to Morgan Stanley, the top 10 crowded longs underperformed the S&P by nearly 3% yesterday, the worst day on record since 2010. And they say, compounding the pain, the top 10 crowded shorts, these are all hedge fund names we're talking about, outperformed by 1%. Yesterday, one of the worst days for hedge funds in years, from what I understand. Not just Morgan Stanley, but anecdotally from the managers themselves.
This crowded term we have to introduce to people, because what most people, I was talking with some people say, oh, it's really crowded. It's like crowded. Was a Who concert? What's crowded?
They're all the same damn stocks.
There were 85,000 people at Wembley. Was that crowded? No. What it means, it's a pretty good turnout. What it means is that there are people who are up on certain stocks. It's all the same stocks, and they can sell Amazon at 1,000.
And they de-risk on days like yesterday.
And they levered to buy it, right? Margin debt is an issue.
And these are people who are just getting blown out. You had that second session yesterday be the blowout session where it didn't go up enough that people were able to forestall the margin butchers. I was once a margin butcher. I mean, look, unless you owned Under Armour today, I'll come after you. I mean, yesterday there was people who bought Red Hat did okay, but there was 499 other companies that they didn't do well.
I just wonder at what point is the hedge fund business model sort of broken? Long short month to date returns down 7.16% for hedge funds, according to Morgan Stanley. Yesterday, by the way, a greater than 3 sigma event, meaning, again, just a horrible day.
Yeah, we had 6 sigma
been why we
this morning.
6 Sigma is the old GE
mantra.
But
we're going to get to
Don't hear much about that.
By the way, there's a look at futures, which were up triple digits earlier this morning.
Thank you.
And you mentioned Amazon, Jim, falls below 1,600 yesterday for the first time since May.
Unbelievable.
Near 1,500 today. It's been 24 hours.
I've liked this thing for, 1,000 points. But there are people who say, Cramer, you loved it at 1,750. That makes you the most stupid person on earth. And I'm not the one who wants to raise rates one time this year and 3 times next year. I'm not the one who says we got to double the tariffs, but I didn't really mean it. And I'm not the one who's doing the selling here. I think Amazon at 18, 1900, everybody loved it. Now they can't stand it. There were people yesterday who said Amazon's going to be destroyed, Amazon Web Services, by the IBM Red Hat deal. Well, I got to tell you, there wasn't a single hedge fund that liked Red Hat and not a single hedge fund that liked IBM. But if you put them together, they're going to destroy Amazon Web Services.
Well, I think you're better off, given our previous, not having hedge funds like you. You're probably better off, actually.
He's absolutely right.